Alright guys, welcome back. This is a intra-week update. So we have this bearish daily order flow right here because we closed below this bullish fair value gap. And right now I'm looking at this relative equal lows over here, right? Coupled by this Tuesday's low and possibly this swing low over here. So when we go into the 15 minutes time frame, we can see that price is in consolidation. So usually when price is in consolidation, it is low probability because it is just sweeping around internal liquidities. Okay, so right here we have Monday's range high and low, Tuesday's high and low, right? And over here we have Tuesday's low very near this relative equal lows. So technically this is now part of the liquidity, and I'm expecting Wednesday later on at around 1:30 Jerome Powell will be speaking, and I think that will induce the volatility. It will induce some volatility into the markets, and I think these lows will be lightly taken. And over here we have some weeks lows that are quite messy and sloppy. So this could be the next target if price has a huge move down. Alright, just a brief run through on the AM session. Over here at 15 there was a news driver. It purged the buy side liquidity and it closed below this highs over here, and subsequently on the next two candles we created a bearish fair value gap. So if we take a Fibonacci retracement tool, and we can actually see that the 50% is even above the equilibrium of the fair value gap. So the next step is, of course, we seek and we look out for the next reference point, which is the order block over here. So the opening of the order block should be your entry right here, and stops over here is a street setup because we took up buy side and we broke below a swing low, so that signals a market structure shift. Okay, so we can sell short in this level, and we look to exit at the rejection block. Why? Because I've observed that during consolidation times, rejection blocks are always the pivot point. Price usually retraces or reverses after tapping the rejection block and not giving us the clear liquidity purge. Let's say there was a low over here and relative equal lows as well. So because this is a seek and destroy profile, usually it is the case like this, right? So in the mid AM session, I actually took a trade within this fair value gap. Because the 50% is not even below this fair value gap when you draw it from the swing high to swing low. So I zoom in into the 5-minute chart and I saw this bearish order block over here. So on my broker I placed a limit order over here, and I think due to the spread it got filled, but on this chart it never got filled. Alright, so when price broke down below and reached the rejection block, because I'm quite new and inexperienced in trading consolidation, so I didn't close my positions right here because I was too tunnel visioning the equal lows over here. So therefore I got stopped out on the 1 minute chart right here at this swing high, because the thing is that when price on the 1 minute took out the buy side here and it broke down, I do not want to see the price trade above this swing high over here. And because once it does, it has the tendency to trade towards this relative equal highs over here, and even more probability when it has created a bullish fair value gap over here. So yes, eventually we do get the retracements above, and right now what we are seeing is that prior to 130, the price broke market structure yet again, and over here we have a fair value gap, a bearish fair value gap coupled with a balanced price range. So I'm looking to see if price will reject over here on the lower time frames, and probably I'll go short, targeting the relative equal lows over here with my stops above this swing high. So let's see. But of course, if price just runs through this swing high, then of course I'll be targeting the sell sides above. But let's see what we get. Okay, that's all.